Business confidence declined in the first quarter as the RMB-BR sentiment indicator slipped to 30 points. This marks the second straight decline. RMB says 7 out of 10 survey respondents are unsatisfied with prevailing business conditions. On a sectoral basis, the retail and manufacturing industries experienced the steepest declines due to poor demand. Azam Hlanga, RMB's chief economist, says the same supply constraints, including load shedding, logistical challenges and heightened policy uncertainty, have kept South African businesses in a stranglehold. Quilter has beat analyst expectations. The British wealth manager has posted a 25% jump in full-year adjusted profit before tax to £167 million. This is better than the £144 million that the market had expected. Growth in profit was underpinned by steady demand from affluent clients for financial advice and portfolio management. Resilient, that's how Sea Harvest has described its annual operating performance. The fishing group has posted a 15% rise in earnings before tax and interest. That's as the firm benefited from strong demand across all markets and improved pricing. A dividend of 40 cents per share has been declared. This reflects a 5% increase on last year's payout. Investment firm Brimstone has delivered a 30% annual profit jump. That's mainly as a result of strong performance from Oceania. That investment contributed over 366 million rand, which is more than double the input it had in the prior year. This even as it faced a challenging operating environment characterized by slow economic growth, high inflation and rand weakness. Brimstone expects these challenges to persist over the medium term. A dividend of 40 cents per share has been declared. That's a 21% increase on the previous payout. Mustake has suffered a profit hit. The ICT distributor has posted a near 59% drop in half-year headline earnings per share and a 13% slide in revenue. The firm says this reflects the adverse impact of both local and global economic challenges, such as high inflation, elevated interest rates, and low consumer and investor confidence. Looking ahead, Mustake expects the macro landscape to remain challenging, but believes that the AIPC will bring a new round of potential growth in the PC market, and the group will benefit from this. Marion Roberts has narrowed its losses. During the half year, the engineering and contract services firm reported a diluted headline loss per share from continuing operations of 16 cents. That's from 27 cents previously. This comes as the group is still picking up the pieces after suffering the loss of its Australian subsidiaries, Clough and RUC Cementation, mining contractors which have been restated as discontinued operations. Marion Roberts considers a dividend on an annual performance, but has already highlighted in today's results release that a full-year payout for 2024 will not be declared. Astral is chickening out on Quantum Foods. The struggling poultry producer is offloading its near 10% interest in Quantum. This for a total consideration of nearly 142 million rand. The transaction requires no regulatory approvals as it will be executed through a bookover. Astral acquired a 9.8% stake in Quantum Foods in June 2020. The company's CEO, Chris Skitter, says the investment was never intended to be long-term and that the unsolicited offer from Country Bird now allows for divestment from the business. Advotech is eyeing higher year-end profit. The private education provider expects its headline earnings per share to increase by up to 21%. Advotech says all its divisions contributed to the strong performance. It's added that schools and tertiary enrollments are tracking in line with targets and continuing their trend of good growth. Further afield, Chinese online retailer JD.com announced its fourth quarter revenue surpassing estimates. The company also expanded its share repurchase program. Aggressive price reductions were cited as a key factor in restoring consumer demand amidst economic uncertainty. Let's take a look at this package report for more.
JD.com saw revenues beat estimates in the fourth quarter. On Wednesday, the Chinese online retailer reported revenue of $42.52 billion, just ahead of analyst projections. Aggressive price cuts helped revive demand from consumers dealing with an uncertain economy. China's economic growth has been shaky recently, while high youth unemployment and lower wages for office workers have led to consumers tightening their purse strings. That's driven retailers like JD.com to employ heavy discounts to support sales. Some analysts believe the company's popularity among cost-conscious buyers has grown over the quarter. JD.com also announced it would upsize its share repurchase program on Wednesday. It said it will buy up to $3 billion worth of its shares over the next 36 months. Investors liked what they heard as JD.com shares jumped 12% in US pre-market trading.
And prominent German logistics company DHL has predicted that its operating profit for 2024 will surpass pre-pandemic levels. However, this projection has not met market expectations due to concerns about declining global trade. Here's more detail in this package report.
DHL says there is little sign yet of a global trade rebound. On Wednesday, the German delivery giant forecast operating profit to come in above pre-pandemic levels. It expects pre-tax earnings of up to $7.2 billion for this year, at best matching analyst estimates. DHL said it didn't foresee any broad economic upturn in the first half of the year, with some markets even set to get worse. Chief Executive Tobias Myers said 2023 had been characterized by a weak global economy and, above all, weak global trade. He said geopolitical tensions would remain a drag this year, with demand set to be volatile. However, the firm expects global economic momentum to start building again in the second half. DHL reported pre-tax earnings of around $6.8 billion for 2023, well down on the previous year and short of analyst estimates. The company said it would step up a share buyback program to €4 billion, or over $4.3 billion. German state-owned bank KfW recently sold some of its stake in the firm as part of a broader privatization push, but it remains DHL's biggest single shareholder for now.